Global stocks have been on track for their best months on record, fueled by the news of COVID-19 vaccine breakthroughs and the US political situation somewhat stabilizing as Joe Biden began his transition into the White House. The MSCI's index of developed and emerging markets rose 12.78% in November, hitting an historic high on Friday at the closing. The Dow Jones last week broke the 30,000 mark, and here in South Korea, the benchmark Kospi gained a whopping 16% this month. Investor sentiment is evidently high, but are prospects really looking up when COVID-19 infections continue to soar out of control and businesses and workers are scraping by? We discussed this today with Joachim Westerholm, Professor of Finance at the University of Sydney Business School. We also have Daniel Yu, Global Strategist at Yuan Securities based here in Seoul. Thank you both for joining us today. Let's begin with you, Dr. Westerholm, joining us from Sydney. First of all, thank you for joining us.
Thank you. Nice to be here.
Well, as you saw last week, the MSCI's main world index, it hit a record high on Friday, and European stocks, they closed up for the most part as well, and the S&P 500, it also closed at an all-time high after rallying 11% in November. There do seem to have been many factors that really gave investors something to be optimistic about, but how significant do you think this jump was, and do you expect this trend to last?
The key to rising equities is the low interest rates, making them the only viable alternative for investors, really. So the prospects are now high for the interest rate will stay low because there's a necessity to stimulate the economies after the pandemic. And the risk of inflation appears low at the moment. So in addition to the result US presidential election, removing uncertainty, this can be seen by a lower VIX or volatility index at the moment. We do expect interest rate to stay low for the intermediate to short term at least. And another key, of course, to what lies ahead is the yield on the US Treasury bonds, and they have not really been rising that much, indicating that at the moment the risk of inflation is kept relatively low. So things are looking very good for equities investors, stock investors at the moment.
Right, so investors are expecting some more stimulus measures from Europe and some other factors around the world as well that give more stability, I suppose, in the short run. And well, the same question goes to you, Mr. Yu. How significant do you think this very recent stock rally was, and do you expect this kind of optimism to continue?
Yes, the biggest reason why the equity market is doing so well is because of the Fed continue to provide ample liquidity to the system. If you look at the level of the total balance sheets, the total assets of Fed, it reached 7.2 trillion, which is rising by 3.1 trillion, which is actually about 2.3 times of what it was in 2008. And if you look at the money supply growth rate, M1 growth rates reaching 46%, and M2 growth rate reaching 25%. And these numbers are just record high level. And also, the president election is over, so people are expecting the overall, the boosting measures to come through in terms of the fiscal policy. And also the vaccines is already ready. So people are expecting the economic recovery will come through sometime next year. So all that adds into the very strong rally that you are seeing in the equity market. And we think that that trend should continue for the next year.
And Mr. Yu, let's talk about South Korea. Now, did it surprise you that South Korea's benchmark Kospi, it also punched through a major psychological threshold as well? I mean, topping the 2,600 mark.
Right. Actually, I'm not that surprised because I have called 2,600 level when the disease hit the overall economy globally. I thought that the level of liquidity conditions were ample enough, and that should push up the Kospi as well. If you look at the liquidity conditions of Korea, the customer deposit numbers are now reaching 63 trillion won, which is a record high level that we've never seen in the past. On top of that, the regulatory environment is definitely positive in terms of the equity market. as the government continues to tackle down on the property market price rise. And also, if you look at the Kospi valuation, it's very attractive on a relative basis, with it is trading at only low teens P multiple versus US is trading at around 30 times multiples, or the developed market is basically in general very high in terms of the P multiples. Also, we are seeing the economic growth rate coming back next year. Also, the earnings-wise, Korea's earnings are actually positive territories because the sector are very much focused on the electronic sector, as well as various other industrial sector that is actually not necessarily being that negative relative to other countries. So all in all, I think that the Kospi hitting the record high ever now, also probably in next year, it should rise even further.
Right, so a lot of positive signals coming from the South Korean economy and its businesses, which, of course, this time around did attract many foreign investors. And now, Dr. Westerholm, let's talk about, well, global stocks again. Well, what kind of effect is Biden's win having on investor sentiment across the world?
Well, Biden's win obviously brought a lot of stability back to the market, something we can observe in the lower volatility index levels at the moment. But a caution here is that the turbulent markets of 2020 have indeed created great opportunities for those who managed to time these swings well. So investors need to be a little bit wary now that we may see more calmer waters ahead, and this means that avoiding too much leverage and perhaps not being as aggressive as in the past year can serve them better. Of course, now the former Federal Reserve Chair has been also elected as a treasurer in the Biden administration, so that is going to bring some interesting developments as well in the market.
Right, so President-elect Joe Biden named Janet Yellen, who was the former Fed Reserve Chair, as his Treasury Secretary. And Mr. Yu, in that it seems that Joe Biden is more market-friendly than people thought. How do you think his presidential win is affecting investor sentiment?
Well, clearly, choosing...
sorry, that was to you, Mr. Yu.
Right, okay. Now, if you look at the Janet Yellen, I mean, she's definitely very dovish in terms of the monetary policies. And having with that kind of stance, I think if she becoming the Treasury Secretary, we think the Fed and the government will probably work together very closely to continue to provide ample liquidity to the system. Some people are probably estimating that the rate rise is not going to hit the market until probably 2023 or 2024. Now, if that's the case, I think that the modern monetary theory will be probably practiced where both government and the Fed working together to boost the economy. So clearly, this is definitely positive news in terms of the conditions for the equity market.
Mr. Yu, I want to ask you about the Dow Jones reaching the 30,000 mark last week. How come it shot up so much? I mean, even when it doesn't, include the major players like Google or Amazon or Alphabet like S&P 500 does?
Right. I think that if you look at the Dow Jones, actually, it didn't really perform that well relative to other index, because it is up year to date by only about 4.8%, where the S&P is up about 12.6%, NASDAQ is up by 36%, and even small caps are up by 11%. But in any case, the reason why the Dow has underperformed year to date is because they had companies like Boeing, Chevron, and Disney's, and all these consumer-related ones, particularly that was heavily damaged by the COVID-19. But relatively these days now, the share price is moving quite nicely because some of these stocks are actually recovering because of the vaccine news, and that the economic recovery will be coming through next year. And if these companies are going to be in a good position, then the Dow Jones should rise along with most of the other indexes. So Dow underperformed, but in the future it might not.
Right, so we're going to see those stocks go up and down as they do. And well, Dr. Westerholm, what kind of uncertainties do you expect ahead for investors in the coming weeks and months?
Well, I mean, we do have the issue that markets have already gone up a lot. They have discounted all of these good things that we have mentioned now already are pretty much in the prices. But obviously, we have, as long as interest rates stay low and the Federal Reserve is able to continue supporting the market, things should be going on the trend there at the moment. Something to watch out for, having now experienced Federal Reserve people in government supporting the governments, we can see that if they start worrying about inflation, there is a chance they might let interest rates creep up a little bit. And if you see signs of that, if you see signs of increasing commodities prices, investors need to be wary that stocks as an alternative investment to others may not be as attractive going forward. So that's something to keep an eye out, any signs of inflation.
Before we let you both go today, we want to ask you about electric vehicle companies. They've really been at the spotlight of global attention, with investors betting on companies like Tesla, NIO, and Nikola. So first of all, to Mr. Yu, do you expect this trend to continue? And are you optimistic about all these EV companies, or do you think it's simply a bubble waiting to burst?
Definitely not a bubble yet, I think. I've been pushing for the EV sector as well as the alternative energy sector. There's a change that's happening in terms of the fourth industrial revolution, that the gasoline cars are probably going down by a significant amount, whereas the electric cars will be moving up. And by 2050, probably the level of the electric cars will be probably higher than even any other gasoline cars in the future. So all being said, the reason why Teslas have moved up so much, it makes sense. Also, these electric cars are moving into the areas such as the auto driving, as well as insurance business, as the accident rates are dropping quite rapidly for these EV cars, and also the auto taxi business. So all being put into together, it's kind of becoming a platform companies. And that's happening for not just Tesla, but Chinese makers such as NIO and other companies like, so similar to the NIO. So all being said, I think that the electric car sector and the alternative energy sectors will probably even do further rise in year 2021.
And all the more bolstered by Joe Biden's win, I suppose, with his climate plans and his plans to invest in the green sector. And your take on this, Dr. Westerholm, what do you think? What do you make of this huge investment into the EV sector?
Yes, I do believe this disruption in the motor vehicle industry is going to continue to benefit investors. I mean, Tesla is a prime example of a security that has benefited from being growing fast and being included in the index. So now, in August 11th, when they announced their split, it was about $800 US. Now we're approaching 3,000. When you take 5 times the current price of close to 600. So it's a perfect example of what can happen when you include a range of companies in an index. So what I would say for investors, a good way to benefit from this is to look at creating a portfolio of potential winners from this growth in and transition to electric vehicles.
Well, I'm afraid this is where we'll have to wrap up the discussion today, but that was Joachim Westerholm, Professor of Finance at the University of Sydney Business School, and Daniel Yu, Global Strategist at Yuanta Securities, based here in Seoul. Thank you both so much for your time.
Thank you.
It was a pleasure. Thank you.
And to our viewers, thank you as always for watching.